Ira Epstein, and here we are with your morning flash update on a wild Friday morning. It is October 6, 2023, 8:25 a.m. Let's not get into what's behind me. We'll come to that in a minute. Let's go to the data. Non-farm payroll. This was the elephant in the room, and it's a blowout number in some ways, not in others. Let me explain. You doubled the amount of the expectation. I saw a whisper number of 190,000 down to 140,000. So those were the two parameters. Nothing approaching 336,000. The unemployment rate did creep up 1/10. More people coming into the market is what's doing this. The August non-farm, they revised it up from 187 to 227, but there's other revisions. So overall, it got, I think they said 190,000 overall. The August, they left the unemployment rate unchanged. The September private sector went up to 263,000 jobs. The prior was 179. It's 100,000 more jobs than the market was looking for. Look at the government. They're adding like mad. The labor participation rate stayed the same. Hourly earnings up 7 cents. The hour earnings month over month up 0.2. They expected up 0.3. And year over year stayed flat at 4.2. So what does this mean? It means what the JOLTS data showed us. We saw big increases, but we saw people aren't doing turnovers of jobs. They're not doing turnovers because there's no wage increase coming from doing that. This shows that. So the good part is that we're at a point where, you're going to get what you're going to get, and you're not going to be able to go across the street and get a lot more money. That part of the game is over. But more people are in the market, and there's more offerings in the market. And where are we? We're going into the holiday sales season, so I don't think you're going to lose a lot of labor. I think temporary workers will be coming on. Now, these numbers did not include the UAW. That'll be in the next report that you get. That's where those will show up. I don't think the Kaiser Permanente will show up because those were just a very short couple of days of a layoff. The Federal Reserve August consumer credit, that's going to come out today at 2 p.m. They're looking for that to have expanded by 11.7 billion compared to the prior month's 10.4. And August unions in Australia, not August, Australia's unions have unexpectedly jumped back on strike against Chevron, claiming that Chevron has reneged on the deal. I don't know how you renege on the deal, but the umpire will get involved. Meanwhile, natural gas prices pumped up 5% in Europe on that news. All right, so it's been everywhere in the market. We plunged to 14,660. We've rallied back 70 points off the lows already there. You plunged here to 33,039 in the NASDAQ. In the Dow here. Take a look at that. And we have come back almost 200 points. And in the S&P, you're about 22 points, 24 points off the lows. The gold market went down, up, all over the board on what to do with this. And the market that's getting the biggest benefit is the copper market at this point. People are working like mad. They're going to have money to buy things. That is the way that you got to start thinking about this. We were worried less jobs would the consumer get hurt. This is showing the exact opposite, that they've got the staying power to keep inflation going. And my guess is that's what's got the dollar up. The gold up. And gold's up while the dollar's up because the dollar's looking at the same thing and going, wait a minute here, just look at these numbers. This was not in anybody's estimate. So this gives the bid there, and immediately that comes from here. Look at this. You're down almost 2 full points in the bond market. You're just soaring on the yield, and you're taking the steepening up. It's going up in the back. You cracked under 30 right after the report in the 2-10 year. So that shows you where you're at with that part. Grain market's very stable, probably waiting for next week's USDA final. What we're going to get is a big number on what is the actual bushels an acre look on everything. You can see the energy markets giving you a pop. Now you're getting your big bounce. You know, I think I and other people just threw in the towel. Here's your 800-point rally coming back. Doesn't matter. You got to figure out ways to not ride markets down that far. Overdone. It's unbelievably overdone. Seeing crude oil drop in a matter of a week and a half, 10%, come on, you don't get that very often, but it's only up 50 points, but these other markets got out of the realm of reality, but there's a number that you can't handle. Now, to me, the big thing is, what does this mean for the report that I just put out on the stock indices? As you'll recall, on Wednesday, I recorded a special report. Now, this report is different than any I've ever done, because what I did with it is I went to the report, and instead of looking at bar charts, I went to purely seasonals on the S&P, the NASDAQ, the Russell, and the, which one did I miss in there? The Dow Jones. And I went and looked very carefully at seasonal charts. And on the seasonals, I looked at the 30, the 15, and the 5-year. And then I did it even different. I went in on a day-by-day basis from October 4th and carried myself into the end of November. And I carried you actually to the end of the year, but November was my focus between now and then. And what you see is rather startling. Does that mean that past performance guarantees future performance? Absolutely not. In fact, just the opposite. Past performance does not guarantee future performance. But it is an idea of what happened in the past. And if you think that what happened in the past might be something similar to what's happening now, and that because of whatever events, remember, over 30 years they've seen the same things we have, 15 the same, 5 not necessarily so. That's pandemic years, and now you're in a little different world. But when you put them all together, what does it mean? How do you see the report? Go to iraepstein.com. iraepstein.com under the word research. You will see it. Move your cursor up here. There'll be an icon. Give it a click. What else? That report is only good for 3 business days. I extended it so you can see it through the weekend. So I think it's an important report. I want you all to see it. Do I know if I'm right in my analysis? I don't. Time will tell. But I was right on the last report. I predicted a big break in September, got it. Now see what I predict here. I'm Ira. You have yourself a great day. I'll catch you over the weekend with our weekend charts. You have a good trading day.